Hi, you are welcome once again to our YouTube channel, and today we are going to be dissecting the topic called mortgage. So we are going to be talking about mortgage system or mortgage financing in Nigeria. How exactly does it work? Is it even working? Are people even getting mortgage in Nigeria? Right here, you're going to be getting more information about that today. And so also remember that we have a lot of videos on our YouTube channel that you should not miss out on. Videos talking about property titles, talking about how exactly to choose the right realtor, also videos on different projects that we have currently in different parts of Lagos, in Lekki, projects with flexible payment plans, projects with also on outright, and also estate tours, the kind of estate that you'll be looking to buy a property, you understand. So either you're in Nigeria in diaspora, or you're in Nigeria, you're looking to buy a luxury property, you're looking to buy an off-plan property, we definitely have everything that you need in terms of investment, from Lekki Phase 1, Ikate, Aja, and even any part of Lagos entirely. Just ensure you dial the number on your screen, and we're going to be getting you the best property for your own need. Now back to the topic, mortgage. What exactly is mortgage? So the first thing right now is to explain what mortgage is. I believe so many of us are very familiar with this topic, especially Nigerians in diaspora. So maybe you're in the US, you're in the UK, Canada, you're very much familiar with this topic called mortgage. You know exactly how it works, and the way it works in Nigeria is pretty much similar to how it is in all those other parts of the world. So mortgage is essentially a system of financing to acquire or to purchase a property. So it's usually a long-term financing method, you understand. So unlike some short-term financing method where you're borrowing money to pay back at a short period of time, when it comes to mortgage, you're borrowing money to buy a property and you're paying back to the financier for a long period of time. So usually it's between 10 to 25 years. It could even stretch up to 30 years. So the way mortgage works is essentially you borrow to buy a property, and when you buy the property, you start paying back the lender little by little for a long period of time, between 10 to about 30 years, depending on the mortgage system you're looking at. So that is essentially what mortgage is. So in Nigeria, we have two major types of mortgage banks. So we have the Federal Mortgage Bank and we have the Commercial Mortgage Bank. So the Federal Mortgage Bank is called FMBN, which is Federal Mortgage Bank of Nigeria. Their mortgage scheme is known as NHF, that's the Nigerian Housing Fund, you understand. So essentially the way it works is you are basically going to be borrowing from the government to finance your own personal purchase of a property. So that's essentially how the NHF works as a scheme under the FMBN. While on the commercial aspect, in that case, we have some commercial banks that are already in the business of financing mortgage loans. So it is just like an arm of their whole entire system, you understand. So it's just like a department, so a mortgage department. So for example, First Bank of Nigeria, Union Bank, GT Bank, all of them, they all have a mortgage bank. You might not really be familiar with them, but they actually have a mortgage arm in their business operation. While there are some banks that are dedicated fully, like their operation, everything is dedicated basically into financing properties. So those ones are specialized mortgage banks. So they don't deal in any other business except mortgage. So in that case, we have a number of examples for that. So we have Global Trust, Infinity Trust, Imperial Homes, we have First Generation Bank, we have Jubilee Mortgage Bank. Like a whole lot of them are in the market out there, and they provide mortgage loans. They are specifically in the business of providing mortgage loans to private and public individuals. And one of the ways this mortgage system works is, for example, the mortgage banks don't only provide to individuals. So sometimes they actually go into partnership with a development company, and I've seen cases actually where mortgage banks meet with developers that have already developed an estate then what they essentially do is to buy all the units at a discounted price, and essentially from there they can, you know, provide a scheme for interested people to buy into that property or those properties, and from there they start paying back little by little. So that's essentially how it works. So it's either they are providing this service to just an individual, or they might actually decide to provide this service directly to companies as well. So sometimes there are some companies that will actually apply on behalf of their employees, you understand. So that's essentially how mortgage works in Nigeria, and even in any part of the world. Now, so what are the major terms to get familiar with when it comes to mortgage? Number one is interest. So interest means that the moment a mortgage bank provides you with the mortgage or with the loan, you understand, you can use mortgage and loan interchangeably. So if they provide you with the loan to acquire or purchase a property, for example, when you are meant to be paying back, you're meant to be paying back at a specific interest rate. So the interest can vary. It could be 10%, it could be 15%, it could be 20%. It basically depends on the mortgage bank that you're dealing with. So for example, for a record, we know that the Federal Mortgage Bank of Nigeria, FMBN, provides the least interest rate when it comes to mortgage system in Nigeria, essentially. So they actually charge the lowest, you understand. They charge single digits. So that's basically around 6% or 7%, you understand. But you see that commercial mortgage banks, because they are privately owned, they want to, you know, make profits, make lots of money. Then you see that in that case, those ones actually charge way higher. So you can see them charging around 13 to 15 to 17. Even some are charging as high as 21% for mortgage. So that's actually how the market is. So interest is basically how exactly you are paying back, and the expected amount on the amount you're paying back for the mortgage or the loan that you have taken from the mortgage bank. Now, the next term you need to get familiar with is reducing balance. So most of the time, those interests are usually charged on reducing balance method. What that means essentially is that, for example, let me give you an example. So FMBN, for example, is going to most likely be only able to give you a loan of about 50 million to acquire a home. You understand? So what that essentially means is that if you want to buy a property that is valued at say 70 million, it means you need to provide equity of 20 million, and they will fund the remaining 50 million, right? So what that essentially means is that the moment you have removed your equity, the amount that you have paid, you understand, the down payment, then the remaining 50 million is what that interest, the interest that they are charging, is going to be on. So if the interest is, for example, 10%, 10% on the remaining 50 million is what? Is 5 million, you understand, for each year. Now, when you pay, so the thing now is that 50 million is the amount outstanding, right? Now, if you pay a certain amount in a year, let's say, for example, you pay 10 million in a year, and the interest for that year is 5 million, you understand? So that means 10 plus 5, that's 15. You deduct 15 million from the amount you are owing, which is what? 50. So 15 from 50 gives you what? 35. They are going to calculate that 10% again on the 35. You understand? That makes it a reducing balance method in calculating the way your amount or your total amount owed is being reduced, or is being calculated rather, every single year. So that's what we mean by reducing balance. So most of the time they basically use a reducing balance method in calculating your repayment balance every single year. Then the third one I want to talk about quickly is equity. Equity means the amount of down payment you're making, you understand? So many of them will tell you your equity should be around maybe 20%, 25% minimum of the total value of the property, you understand? So most of the time what I advise my clients to do is to ensure that they are dropping, or they are bringing in, a very substantial equity or deposit, because when you do that, it essentially reduces that interest that you're paying every single year. So for example, if Mr. A and Mr. B are buying a 70 million naira property, and Mr. A makes a down payment of just 20, the bank is funding 50, while Mr. B makes a down payment of like half, like that's 50%, say 35 million. And what you see then is that in the first year, Mr. A is going to be making, if you are assuming a 10% interest rate, Mr. A is going to be paying, aside the repayment amount, Mr. A is going to be making a 10% of 50 million, which is about 5 million extra, while Mr. B is going to be making 10% on 35 million, which is going to be just what, 3.5 extra payments. You understand? So it's very key for you to ensure that you have a substantial. I mostly advise my clients to do half down payment, because it always helps them to reduce the repayment amount and the total amount they are paying at the end of the day in terms of interest and the total outstanding balance. Then lastly, another term you need to get familiar with is credit score. Now this credit score is mostly used in more developed economies compared to Nigeria. That's because most of those developed economies like UK, US, Canada and the likes, their system, the economic system is built on credit. So you see that they use more of credit cards, and all those things actually flow into your credit score as a person. In fact, it is even a known thing that the fact that you are not borrowing money translates into you not having a very good credit score. So you have to be borrowing money and be paying it back for you to have a good credit score. So, but essentially how you ascertain your credit score is basically by looking at your cash flow right from time, how much you've been earning consistently, if you have a very good source of income, and also if you do not have substantial debt on ground. So that essentially helps us determine what your credit score is and to know if you are actually eligible for the mortgage loan. You understand? That's essentially how the credit score works, or why we have credit score in this scenario. Now, so what are the major problems encountered? Why exactly do people not make use of mortgage that much? You understand? Because seeing that we have so many mortgage banks, and at the end of the day we still see that the building or the housing deficit in Nigeria is close to 20 million. You understand? And if not even more than that. So we see that there are usually some sort of problems encountered while trying to get trying to get a mortgage loan. So one of the major problem is the fact that the interests are very high. So for example, the FMBN, which is the Federal Mortgage Bank of Nigeria, currently gives you mortgage or financing at minimum of 6%. You understand? And we can see that other commercial mortgage banks are also charging way higher than that. They are charging even as high as 13 to 21%. And the reason behind that is not far-fetched. It's essentially because every mortgage bank is essentially meant to charge an interest based on the figure that is above the inflation rate of the economy. So because Nigeria is actually an emerging market, so you see that they are basically not able to provide you with interest. They are basically not able to provide you with mortgage at interest that are very attractive, essentially because of the inflation rate in the country. And so you say, okay, how exactly does the inflation rate affect the value? One thing that is there is that if the bank gives you 50 million naira today, if inflation in the economy, I think inflation now is close to about 18% per annum. So if the inflation per annum is 18%, what that essentially means is that in another 1 year time, the money they've lent you is going to be less 18% by the inflation figure. You understand? And because these commercial mortgage banks are, they are profit making oriented, at the end of the day, they don't want to run at loss. So they see that, okay, they have to ensure that they are edging against inflation. So any interest they are giving you has to be above the current inflation figure. You understand? It has to be adjusted to the current inflation rate in the country. So which is why we see that majority of the time, the only organization or institution that is able to provide you with good interest rates is actually the one run by the government, which is the FMBN. So why exactly do we see that people don't even really do FMBN that much? The major reason or issue behind it is because of the bureaucratic process in FMBN. So we see that lots of people are not able to get their mortgage, so they just stop at the file number stage for a very long time. Some people are there for 2 years, 3 years. They've not gotten their mortgage approved, even though they have very good credit score. They have every set, like they have all the documents that is required of them to get it. But at the end of the day, it's taking too long for them to get it. There are so many applications right there at their office, and they are not able to get them out at the end of the day. So essentially, this is why we see that people don't really approach FMBN, and they end up approaching commercial mortgage banks. Even despite approaching them, you see that the major bottleneck there is that the interest rates are, they are actually too high. You understand? So when they are charging you interest rate as high as 15%, 20%, 21%, it is definitely too high. So at the end of the day, we see that a lot of people are actually not really consulting mortgage banks to finance their loans. That's one of the major problems at hand. Now, number two is lack of awareness. So we see that majority of these mortgage banks are not really putting it out there. So majority of you don't even know that there are mortgage financing provisions for Nigerians. You understand? And even Nigerians in diaspora, it's very possible for you to get a mortgage financing. You understand? But it's just that the process is quite different from Nigerians that stay in Nigeria. You understand? But there's not so much awareness by these mortgage companies, which I really can't tell exactly why, and which is one of the major factors why mortgage is not really rampant in Nigeria. Yeah. Then the last one is the new system, the new regulation that has been put in place by the mortgage banks, which is that before they can provide financing for you, the equity has to go through them. So on a normal day, the way it is meant to work is you're meant to walk up to a developer that has a property you want to buy, and the property already has a good title, because the bank will not even finance any property that does not have a good title, maybe C of O or governor's consent. So now the major thing now is that on a normal day, you are meant to, if your property is 70 million and you want to make an equity of 20 million, and you want the bank to finance the remaining 50 million for you. Now the 20 million is something that you're meant to give the developer, and the remaining 50 million is essentially what you're meant to process for the bank to make payments to the developer, and you get a total of 70 million, and you start repaying your loan little by little. But what we see now is that the banks are now demanding that the clients should even make their equity through them. Now, one of the major problems that this basically causes right now is that when you approach a developer and you tell him you want to buy a semi-detached duplex, you want to buy a property, you want to finance via mortgage. Now, the major issue right now is that you are also competing against those that are cash ready. And the normal time frame or average time frame to get your mortgage processed right now in Nigeria is about 2 months. That's 8 weeks essentially. Now, what happens then is that during the time you are processing your mortgage, when you have paid the equity through the bank, somebody else approaches the developer and tells the developer, I want to pay cash for your property. Then what you see at the end of the day is that while you are still processing your mortgage, somebody else has paid for the property and the property is off the market. Then you are back to ground zero. You're starting from the beginning all over again. Now, that is a major bottleneck into acquiring a property via mortgage. I've seen this happen over and over again. But one thing I want you to all know is, despite all these challenges, at Excel Homes Realty, we've been able to broker over 200 million in sales via mortgage for different families and clients. And we definitely have the solution. We definitely know what exactly to do to ensure that you're still able to edge against the market. For example, we have been able to consult banks that are charging relatively lower interest rates compared to others, which we can also recommend to you when you consult us. And also concerning saving time, you understand. So one of the things we've been able to achieve is ensuring that the process doesn't take more than 6 weeks. You understand. So ensuring that there's speedy, everything is done with time consciousness. You understand. So that's one of the things we've been able to put in place, and we've been able to broker a number of deals in the mortgage space. So if you're looking to buy a property via mortgage, or you're looking to even buy via cash, regardless, you can reach out to myself. My name is Adiola Sanusi. I am the MD CEO of Excel Homes Realty, and we've been able to close different properties, different deals from different spectrums of the market. So if you're looking to buy via mortgage or via cash or any other system you're looking to, just reach out to me and we can always get you a property via any system of your choice. I hope you found this video very educative and helpful. If you did, please ensure you like, subscribe, and hit the notification button. You can also send this video to anybody you feel might be helpful to. Thank you very much for your time. I really appreciate you watching this video to the end. God bless you.